All right, welcome back to eXp Realty Minnesota. Today I have a special guest with me, Mark Nelson over at Zillow Home Loans, and we're going to talk about what's happening in rates today. Welcome aboard, Mark. How are you doing today?
Hey, Justin, doing great. Glad to be connected with you today. Excited to chat for a bit.
Awesome. So the first comment I had, I love the architecture you guys got down there in Wichita, Kansas. I didn't know you guys did skyscrapers.
Yeah, it's a Google background that I'm using, so it's not real. I'm glad you're you're convinced, but yeah, this is not really the environment behind me.
Awesome, awesome. All right. Well, sorry for throwing you under the bus. Let's jump into what's going on with rates. I know there's a lot of talk in the markets today, and if people on social media where everybody is kind of like, oh, what's happening? Why don't you tell me today what happens? I send you a buyer today who wants to purchase. What kind of expectations should that buyer have?
Great. Yeah, so right now we're actually in the middle of a period where we're seeing rates drop, which is incredible. Something that we've all been waiting a good chunk of this year for pretty much all year. So it's finally starting to happen. Um, of course, don't let the headlines fool you. This isn't anything massive, but we're seeing conventional rates, um, that used to be in the sevens are now into the sixes, and so that does make a big difference on monthly payments. But yeah, finding a conventional loan with a rate in the mid sixes is much more attainable now, or that you know just a few months ago was not the case. It'd be something you really had to um, pay extra costs to accomplish or buy it down.
Hmm. Awesome. So, obviously credit and income have a really big impact on this, on what you end up paying. So let's just say you're like primo 800 credit, great savings, good cash flow. Can they get into the fives? Is that something, a discussion that they can have with you today?
Yeah, definitely. Getting into the fives, like I mentioned before, what it used to take to get into the sixes is a buy down. It's something you'd be looking at for the fives, um, and so it's something you can explore and see if it makes sense for you. A lot of people, even though they have that option to buy it down, are still not doing so because they anticipate that they'll be able to refinance whenever rates come down further, which despite what headlines are saying, there's no guarantee that rates will continue to drop. There's usually a couple ticks down, one tick up type of thing is how it works.
Hmm.
And so we don't know definitively when rates in the fives be more accessible, but
Hmm.
based on inflation reports, it looks like that's the direction we're going. We just, I can't say if that'll be something we see at the beginning of next year or the following year. Who knows
I
when
think
we
we're.
arrive
I
there.
think. I think from my perspective as a real estate agent, also being an old man, just kind of watching these things, what kind of play out. I do feel like we're moving into that territory. Maybe like the next 12 months, I think would be a reasonable expectation to start seeing affordability. Right now, one thing that I've noticed is that sellers haven't quite adapted to the newer market, and so I'm getting more concessions from sellers in general. How can those seller concessions that we get in the PA, can those be used for a buy down? Is that something, what does that look like? Can you explain that to me a little bit more? Let's say I have 10,000 on a $350,000 sale. Can I use some of that for the buy down?
Absolutely. Yeah. And there are a couple ways to buy the rate down. One of them is a permanent rate buy down, which, for example, on a 30-year fixed rate loan, a permanent buy down takes what might be a 6.8, brings it down to, I don't know, 6.5. It's all, I'm speaking hypothetically,
Correct.
but it brings it down for the life of the loan. And so those seller concessions can absolutely be used in that way. Another thing folks are doing, people who do anticipate a rate decrease, or a potential refinance within the next year or two, what they are doing is what's called a 2-1 buy down, where you can take that seller credit, reduce the rate substantially over the first 2 years. So that way
By
you can.
substantial, by substantial, what do you mean by, six and a half? Are we talking 5.85 for the 2 year?
So we're talking 2 full points. So let's say hypothetically we're starting at a 6.5. A 2-1 buy down would bring you to a 4.5 for year 1, a 5.5 for year 2, and then back up to that 6.5 for the remaining life of the loan. And so what a lot of folks do is they'll take advantage of that, get the seller credit to buy that down, and then plan on a refinance before year 2 is up. Um, of course, that depends on where the market lands. Uh,
Hmm.
but yeah, that's what a lot of folks are doing now, just to, you know, be able to get help from the seller, or affordability with the monthly payments,
Hmm.
and not have to overpay for a home, which is one of the huge benefits of the market right now.
That buy down, is that figured in like, and obviously, again, credit, income, qualifications, all these things play into this factor. Are we talking a point for that 2-1 buy down? We talking maybe 2 points for that buy down? How much as a percentage of the sales price can I kind of like throw out there for a buyer that's going to be reasonable for them?
So typically, to afford the 2-1 buy down, it's between 2 and 2.5 points. That's something I like to run the numbers and quote exactly, because,
I
like you said,
understand.
depending on loan amount, rate, all those factors, that cost varies.
Yeah, I think that's a really great figure. If I tell people, well, for 3% seller credit, you could potentially be using these funds to get some kind of buy down, talk with Mark, and he can get you those really, really specific information. For anybody, any of my Zillow customers that I'm working with currently, if any of you guys want to talk with Mark, let me know. I'll get you guys connected. Mark, is there anything you want to say to these Zillow clients that I'm out there showing every day? Why should they pick Zillow, and why should they work with you specifically, Mark?
Yeah. So as far as what Zillow has to offer, I mean, it's constant communication. I'm always available, always reachable. And we also do have an incentive tied to working with Justin and I, which is a free appraisal that Zillow covers. And so that can go a long way and eliminates a lot of upfront risk as well. So, Justin, what I can do is send you my calendar link, so we can put that in the
Cool.
in the YouTube description. That way, if you want to set up a time to chat, or just shoot me a text, give me a call. I'd be glad to connect and have a stress-free conversation about what this might look like, to purchase a home.
Awesome. Well, thank you so much for coming on eXp Realty Minnesota today. If you guys have enjoyed this video or gotten any value out of it, please subscribe to the channel. If you have any questions or whatever, throw them in the comments. I know it's a newer channel right now. I have one comment, so I'm hoping to get that second comment any day now. I know it's coming. Um, but yeah, if you got some value here, if you're thinking about buying or selling, this channel is a great resource for you. Thank you again, Mark. Have a great rest of your day, and we will see you in the next video.
Thanks so much, Justin.